Hey everyone, and welcome back to Your Money Your Life podcast, episode 270 of the pod. So make sure wherever you're listening, you like, subscribe, 5-star rate, and review this podcast. We're going to get into it. There's a lot to talk about. First and foremost, we are going to discuss um, the market update and what's going on in the market. First of all, let's kick things off with what's been happening. On Wednesday, we saw the market kind of bounce back. That was Wednesday as of yesterday for those listening on Thursday of this week. So, people got to remember the volatility doesn't always equal decline, but sometimes it does. Volatility just means actually more turbulence per se in the market. If you think of the boat that's rocking up and down in an ocean, right? Like that's turbulence, volatility, or a plane up and down. That's kind of what you'll see with volatility. And it'll be more dramatic moves, right? So underneath the surface, there's some stuff happening. There's big headlines this week that are making waves in the market. We have, President Donald Trump imposing tariffs. So we'll talk a little bit about that. So the big thing is that he said that they're going to consider and they're going to enact universal tariffs on all imports. So there's going to be universal tariffs on all imports now, and that's China, that's everyone. There's going to be these universal tariffs, a baseline 10% tariff on goods coming from every country, and that's on top of the previously floated 60% tariffs on Chinese imports. So this is a big deal. Tariffs are pretty much, if you think about tariffs, are essentially taxes on trade. So when you apply them broadly, they raise the cost of goods across the board, from smartphones and electronics to clothing to tools and even groceries in some cases. And these costs tend to get passed to the consumer, which could lead to potentially higher inflation. So that inflation, of course, will have ripple effects in the economy. If inflation ticks up again, the Federal Reserve may need to hold off on cutting interest rates. Even the two cuts they predicted in 2025, they may need to hold off on that. Or in other circumstances, you know, there's going to be choppiness in the markets, of course, of that nature. I think that's short lived. The markets are the first to react, first to recover, and so that's something to understand. But if you think about it, for long-term investors, policy headlines and things that happen geopolitically, political headlines, they create short-term noise. They create short-term noise and not long-term signals. Remember that they create short-term noise and not long-term signals. So we've seen, this before in the first term of President Trump, where there was tariff threats and caused market swings, but they didn't derail the overall upward trend of the market, as you know, right? The first term was what was the started in 2016. The market since 2016, I could show you the chart, or we will, has increased incredibly since then. So it's important to understand that, that's why you have investors, because investors can understand volatility, can understand what's short-term noise versus long-term signals, can lean into the discipline in portfolio creation. Because we build portfolios expecting speed bumps. That's part of this. We build portfolios expecting speed bumps, and tariff policy, is part of that, right? Like, that's a speed bump. And so you have to understand that part of things, and fully grasp it, um, to really understand what's going on today. Because you're going to see a lot of noise, a lot of headlines, and that's going to be, something that is driving a lot of market sentiment currently. So as I said, I promise we'll look at the chart. Let's hide these median controls here. As you see the market right now, the S&P 500, the early indication for the market is not great for today. And again, these volatile swings are usually something that comes and goes. Again, we've predicted and expect a few weeks of volatility to get to late April, early May, where you'd at least see that volatility start to subside. So that's one thing to note. And as we said early in the opening, um, again, make in the opening, some stuff that's going on in the market. The 10% sweeping tariffs for even higher for some countries. And this is, again, a global trade war potentially. And that's why you're seeing the market react. It's a global trade war potentially. Trade, imports, exports is a big part of the economy. It's a big part of, obviously what all companies use is trade and international companies. Every company that's large is usually international. They're importing, they're exporting. You can buy things from anywhere, of course, across the world. So that's why this is such big news. And you're seeing that. You did see jobless claims unexpectedly fall. That was in the weekend in March 29. The fall came in at 219,000. This was below a Dow Jones forecast of 228,000. So that's something to note as well. Let's jump into a little bit about the tariffs here. If we see more information, we can talk about it. Again, the sweeping tariff agenda, this was unveiled yesterday, including a minimum 10% rate on all trading partners and additional levies on countries with the biggest trade imbalances with the US. The European Union faces a 20% rate, while a 34% levy will be imposed on China. The Trump administration aims to dramatically transform trading partnerships with the goal of strengthening US manufacturing, describing the tariffs as reciprocal. The president said they do it to us and we do it to them. Very simple. We can't get any simpler than that. So the president had a large chart displaying the different countries and the different tariffs imposed. And again, this is going to be something that's not going to be the market's trying to understand the significance on the economy and how that is. Because what the one thing the market we like is consistency. Investors like consistency, and this is a little wrench or speed bump, as we explained, in the consistency of what's going on. So that's why you're seeing such a dramatic move in the markets today. You're also seeing layoff surge. That's not to be forgotten and thrown off to the side. Layoffs in March surpassed 275,000. That's a near record setting figure, topped only by those of April and May of 2020. That was during the pandemic, when the pandemic shut down much of the economy. This is according to data released Thursday by the outplacing firm Challenger, Gray, and Christmas. The Department of Government Efficiency, which is working to shrink the government, was responsible for the vast majority of cuts. While other jobs data remained stable, federal layoffs of the month were up 672% from a year prior. That's crazy. Wow. So again, job layoffs, trade war, all these things are definitely short-term signals of a slowdown in the economy. There's no other way to put it. There's short-term signals of a slowdown in the economy. The GDP forecast, but I think it was the Federal Reserve in Atlanta, predicted a negative 2.7 or 3.7% first quarter retraction in economic activity in the GDP. And so that's to be a note. Let's look at TikTok. Bidders are lining up for TikTok. I think April 5th is a sell or divest deadline. And Amazon is lining up, and mobile tech firm Apple Oven have submitted bids. Oh, Amazon submitted a bid. That's quite interesting. Before the video sharing's app, April 5th sell or divest deadline. According to various reports, negotiators do not appear to be taking Amazon's bid seriously. Interesting. As a potential pact involving Oracle and private equity firm Blackstone reportedly remains under discussion. President Trump met with White House officials to Wednesday to discuss a framework to keep TikTok in operation before Saturday's deadline. So the deadline is Saturday, April 5th, and they need to get something done. And I guess apparently Amazon submitted a bid, but they don't really take Amazon's bid seriously. But again, this deadline keeps coming back, keeps getting pushed back, and then they're supposed to say a seller or divest, but it never happens. I don't think they're going to sell. They would have, I haven't heard rumors of the company getting close to agreement, but you know, are they going to make it go dark? That's the question we have to ask. I'm super, super curious on if this will make the app go dark because, again, it's a really highly used by a lot of people, and there seemed to be more favoritism in it in the app than it was before. But we'll see. We'll see. That's a something to be seen. I'll keep our close eye on it for the April 5th deadline of Saturday. Goldman Sachs slashed their S&P 500 forecast again amid tariff tension. So Goldman Sachs slashed their forecast. Again, people are thinking the next couple of weeks or a few weeks, month or two is going to be volatile before we recover, and maybe start to get back to highs towards the end of the year, if not, before that. And so that's one thing to keep in mind as you look at what's going on in the market. Again, there wasn't much crazy news. I'm going to keep this shorter just because of one. I was incredibly sick last night. I'll spare the details, but not wasn't feeling well. Still not feeling greatest today, but wanted to make sure we got this episode out to everyone. We will say this: understanding short-term noise versus long-term signals. That's the biggest thing in the round table today. Short-term noise is stuff you'll see here, headlines driven. Um, Things that are going to really push emotional investors to do certain things, while smarter people are taking the opposite approach. And that's what we tend to do in these situations, because you're going to see a lot of headlines over the next couple of weeks. And you want to take a smarter approach to those headlines. So keep that in mind. Keep that in mind as you go through these things. There is so much. If you're a long-term investor, you actually should be salivating, especially a long-term young investor. You should be salivating at these opportunities, right? You don't see these opportunities come often. Look at a year period. These are opportunities, right? Look at a 5 year period. We mentioned earlier a 5 year period. These are opportunities for people. So just keep that stuff in mind as you go through this, and keep that long term perspective, even through short term. I can't even say that today. Short term noise and signals. Keep that perspective. On the New Street Advisors Group side, a lot of great things happening always, as always. So, again, share this with family and friends if you haven't already. Share this with your family and friends. Last week's episode, how did you like the Chat GPT image creator? Did you guys try it? Tell me what you think. Leave it in comments. And also with New Street Sports, we have now six incredible um, prospects, NFL prospects that are under the New Street Sports umbrella. So we are moving, shaking. We love it. We love the people that we've signed and that we are representing as they chase their dreams. April 24th through 26th is the draft. And so we're excited for them and for ourselves. Again, make sure you like, subscribe, share this with family and friends. We do this pretty much every week, even if I'm feeling sick, throwing up, which I was, and all these other stuff that I'll share. Spare the details. All right. We'll see you guys next week.